clients. So I've also going live on YouTube, so you can also get to see me and get to know about mortgages I want to talk about. Now, today is about first-time buyers. Now, a lot of my first-time buyer clients have two problems. Either they don't have enough deposit or they don't have the affordability. If they have issues with both, then there is another mortgage that we can talk about as well. So let's start off with those of you that don't have a good deposit. Now, there's a couple of mortgages that we can talk about. So there's one mortgage that is 100% loan to value. So what I mean by that is the loan compared to the value of the property is 100%. Now, normally you'd say, I'm going to put down a 5% deposit or a 10% deposit. Now, in the example of a 10% deposit, what it would be is the loan to value would be 90, i.e. the loan to the value of the property would be 90%, and the difference, that 10%, would be made up by your deposit. But what I'm talking about today is 100% mortgages. That's right. Now, whenever you're looking for a property to make it and you're planning to do 100% mortgage, you're not putting any money into it, I really would be careful about the property that you pick. Now, not only would I double check the property that I'm picking if I'm going for 100% mortgage, but I would also check the location, because at the end of the day, there is no buffer at that point. You are whatever the bank basically will give the loan for 100% of it. So what I'm saying is, unless you have a property that you can improve and you know you're going to put equity in it, equity is the difference between what the mortgage balance is and what the property's worth. If there is some equity in it once you start, whether it's renovating, putting in new kitchen, new bathroom, if it's in an up and coming area, all of those things really do help cushion the fact that you've started off with 100% mortgage. I mean, at the end of the day, you really need to look into that. But I understand completely, because there's a lot of people out there who are saying they really want to get on the property ladder so they can afford to make the mortgage payments. They can afford to actually, they want to start paying a mortgage. They don't want to be, renting anymore and paying someone else's mortgage. Completely understand that. But just make sure you're getting the right property. Now, what I want to talk about is when you're getting 100% mortgage, what is the criteria? Now, there are a couple of lenders that will do it, and the criteria basically is they want to know, it's normally for people that have been renting and you've got a track record of renting. Now, you need at least 12 months of having a track record of renting. Now, I spoke to the lenders this afternoon and I said to them, if someone lives with their parents, but they've been paying rent for 12 months, would that still count? And they actually said they would look at it on a case-by-case basis. So it wasn't a straight no. So as long as, you can evidence, and it's not just as simple as your parents saying, yeah, he was paying or she was paying rent. They will actually want to see bank statements of you actually putting money in for 12 months. If that's not the case and you've been renting privately and you can prove that, all the better. The other criteria are things like your age and also what your income is. That all has to have an effect. So you can DM me and I can go to everybody on a case-by-case basis and explain what that's all about. The other thing that you need to be aware of is you have to have 12 months. So obviously the scenario of you living with your parents isn't ideal. If you're renting privately, it is a lot easier because they may want to ask to show proof that you've been paying your utility bills as well. The maximum loan you can have for the 100% mortgage from this particular lender that I'm talking about is 600,000. So that's a great thing. The one thing I would say is obviously be aware of your stamp duty, because with stamp duty, you know, anything over 425,000 you're paying stamp duty on. After the 1st of April, anything over 300,000 you're paying stamp duty on. So I hope that makes sense. Right, so that was the 100% mortgage that I was talking about, and if you have any questions, by all means put them in the chat. The next one is called the 5% mortgage. So, sorry, the 5K mortgage, and that is 99 loan to value. Now, the 100% mortgage and the 99% mortgage, these are all non right to buy. Okay, tonight I'm not talking about the right to buy. I'm talking about first time buyer mortgages. So I'm talking about 100% mortgages, and I'm talking about 99% mortgages, and also I'll be talking about joint borrower sole proprietor mortgages and buy for uni. So they're all standard first time buyer mortgages. They're not the affordability mortgages, i.e. your shared ownership or your right to buy. I spoke about those yesterday. What I'm talking about today is first time buyer mortgages. If you've got problems with the deposit, then a great one is the 100% mortgage, which I've gone through the criteria. And then now I'm going through the 99%. So that means you only need a 1% deposit. And the 1% deposit has to be at least £5,000. That's the one thing. So it's called the £5,000 deposit mortgage, and you can get either 100,000 is the lowest amount, and 500,000 is the highest amount, and obviously the 1% is the 500,000. So you will have to put in 500,000, whether you're doing a 200, a 300, a 400, a 500, but the maximum loan would be the 500. Now, when you're looking at that, you can have a maximum term of 40 years, as I said, a minimum deposit. You do have to be first time buyer. It is a first time buyer mortgage. But the other thing I wanted to say is it is if it's a joint application, if there's two of you applying and one of you is a first time buyer, then you can definitely go in and do that. I want to buy a house with my parents and my partner. Is this possible? Yes, it is. Now, but it depends. What I'd suggest to you is if you want to put your parents, so I'll go on and talk about that. So we've done the 100%, we've done the 99. If anyone's got any questions, either put them in the chat and I'll go back to it, or you can send me a DM and we'll go from there. Please remember the whole thing is on live, also on YouTube, so you will get the whole of it. You'll get the highlights obviously from TikTok, so please remember to follow and subscribe if you haven't already, and support my channels. I do appreciate it. Now, after the 100% and the 99 was all about deposit. If you have the deposit but you have an issue with your affordability, you can do what's called a joint borrower sole proprietor. Now, the way the joint borrower sole proprietor works is you can have, say, the four of you. So in this example, there's yourself, there's your partner, and there's your parents. So but just your parents, not his parents or your partner's parents. And what it would be is the four of you would be on the mortgage for affordability, but only you and your partner would be on the deed. Now, the reason why this is good is because, one, obviously it helps with the affordability. Two, because it's just you and your partner as first time buyers being on the deed, i.e. buying the property. What it means is stamp duty exemption. You still have that. Rather than the four of you and your partner and your parents all buying together on a joint mortgage, then you lose stamp duty, your first time buyer exemption, because obviously, well, I'm assuming your parents don't don't aren't first time buyers. So that's where that would come into play. The next thing to be aware of is you will need your parents and you will need separate legal counselling, because they are actually putting themselves on the mortgage. So they're having the debt, but they're not having the asset. So on their credit report, it will show that there is a mortgage outstanding, and it will be calculated when, if they need to remortgage on their current property, if they still have a mortgage on it. When you're working out the affordability, if your parents are coming on the mortgage and they have their own mortgage or credit cards or loans or whatever, all of that is still calculated on affordability. So that's something to be aware of. But the majority of times, by the time the first time buyer is ready to buy, if their parents come on, the parents have normally paid off a lot of their mortgage, and you're in, you know, a much better situation. So that's something to be aware of. The last one I wanted to talk about, and then I will go to questions, is the Buy for Uni, which I think is such an amazing product. And I bought, as I've said to quite a few of you, as soon as I graduated from uni, I put down a deposit and bought my first place. But if I'd known, or if they'd done a product called Buy for Uni, I would have got it in a heartbeat. Now, the way Buy for Uni works is you do have to be a university student, and you don't need a deposit. So you can either put up to 20% deposit or no deposit at all. So it's another 100% mortgage. And the affordability of the mortgage is based on rental income. Now, say you buy a property that is a 3-bed property, you can live in 1 bedroom and you can rent out the other 2. And as long as the rent covers the actual mortgage payment up to 125%. So say your mortgage payment is £1,000, as long as the rental income is 1,250 every single month, then you can actually apply for that mortgage. And as I said, you can put down up to a 20% deposit, but you can also not have a deposit at all. So this is a great way that if you're a student and you don't want to waste money on halls of residence or renting privately, you can actually get on the property ladder while you are studying and get your fellow students to rent out rooms in your property and cover your mortgage for you. And then when you graduate 3, 4, 5 years time, you've had all those years, and you can either keep it renting it out, or you can remortgage it, or you can do whatever you want with it at that point. You can even sell it and buy somewhere else if you're not going to be in that location anymore, or you can get an agent to manage the property, because I'm assuming the property would be very close to a university and it will still rent all day long. So it's definitely worth looking at. Right, so let's have a look at these questions. And as I said, if anyone's got what I've talked about tonight, just to recap, is the 100% mortgage, the 99% mortgage with the 5k deposit, and joint borrower sole proprietor, which helps with affordability, and then also the Buy for Uni. Okay, so let's have a look. Thank you everybody who's liking this video. I really appreciate the support, and feel free to sort of follow my TikTok and follow my YouTube. How come the council hasn't given their offer yet? You'll need to ring the council and speak to them. But tonight I'm trying not to talk about right to buy. I'm talking about first time buyers. The next question, I want to buy a house with my parents. We've talked about that. If I receive a mortgage offer before the contract, if I receive a mortgage offer and before the contract finalises rate change, will I get a new rate? Right, it depends. Did you do it with a mortgage advisor, or did you do it direct? If you did it direct, then they have no obligation to advise you of a new rate. But if you've, depending on your mortgage advisor, they would, put in a new application and see if they can request it. Normally, when you've put in the new application before you get the offer, your mortgage advisor will stay on top of this and change it if necessary. If you've got the offer but you haven't accepted it yet, then I'd speak to your mortgage advisor. If you haven't done it via a mortgage advisor and you've done it direct, then unfortunately it's a no. Will Nationwide lend money? The registry has been updated. The property is owned by less than 6 months. Right, I'm not 100% sure what you mean, but I'm assuming you've got a mortgage, you've had it for less than 6 months, and you wanna know if you can do additional borrowing? Um, the answer in a nutshell is no. When you want to do additional borrowing, you have to have at least had the mortgage for 6 months, and then you can apply for additional borrowing. And the way it would work is you'd apply for additional borrowing with the exact same lender, but you'd have had to been paying the mortgage for 6 months. You have to also additional borrowing if it's for home improvements. Normally, you can go up to 90 loan to value. So it depends what your loan to value is and what the property's worth. You can also, if you really need the money and your current lender doesn't allow it for any reason, additional borrowing, you can also look at putting a second charge on your property. But again, the first charge needs to agree that. So I would get in touch with either myself or another mortgage advisor, and they'll be able to talk you through that in a lot more detail. Is it normal for a solicitor to be inquired to do wind up in order in the court for my buyers? In the courts for my, right, again, I'm not sure. Winding up order. I'm not sure what you mean by this. At the end of the day, you don't normally have to go to court when you're buying a property. Yeah, I'm really not 100% sure. Maybe you'd like to DM me, and we can arrange a phone call and you can explain it in a bit more detail, but I'm not 100% sure what you mean. Okay. Just be careful, someone's put in the same question like 5 times. It makes it really difficult. Right, so how many months pay slips will I need as a first-time buyer? The standard is 3, but I would be careful because you can go with the golden 3 months pay slips, but they may ask for more. So if the reason you've got less pay slips is because you've started a new job, if you explain that, they're normally fine with you. If there's some kind of discrepancy with your pay slips or whatever, or if your pay, the thing is, when you're working out affordability on your pay slips, obviously it will have what your basic salary is. If you have commission, bonuses, things like that, they sometimes ask for a few more pay slips, or they'll ask for your P60, which is what you earn annually. You get that normally in April every year. So depending on what they want, I mean, the worst I've ever seen is, or the most, sorry, I've ever seen is someone asked for 2 P60s and 12 months pay slips. And that was because we were trying to prove commission and bonuses. They had a very low basic, but they got a very high commission. And in order for us to get that included in the affordability, we had to prove up to 12 months. So that's the most I've ever been asked. I hope that helps. Are you able to get a mortgage with a low credit score? Yes, you can. They do their own credit scoring. So the actual number on the credit score of, Experian, Equifax, or TransUnion isn't what they go by. What they go by is your debt to income ratio, your credit utilization, and if you've got any arrears, late payments, defaults, CCJs, and things like that. My mortgage was declined because there are too many private owners on my block. Yeah, that is something that sometimes happens. There's a website called Street Check, and what you can do is you can go on and you can check if this is an issue. Some lenders aren't as fussy as others, so by all means, find a mortgage advisor like myself, who's like, I'm directly authorized, so I have access to all the high street lenders as some of the specialists. If you find someone that has that level of access, then they might be able to find a lender that's a bit more flexible. The other thing is, if you ask around the block that you actually live in, and find out how many people are potentially about to buy, and you could all put your mortgages in together, then that way you'd change the ratio, so that may help. Is it worth paying mortgage off if I have a balance in savings? It depends what you're going to do. So, for instance, when you're looking at that, so if you're paying your mortgage and you've got an interest rate of, say, 4.5%, and then your savings is, say, 2%, it's actually costing you 2.5% every single month, because obviously the cost is 4.5%, but you're only saving 2%. So, in that scenario, I would actually pay off the mortgage, because it's costing you more every single month. But back, COVID days, when to borrow money was only like 1%, and people's savings, depending what savings account you've got, was, say, 2-3%, then I would have said borrow money, because it's cheaper to borrow money. So I hope that makes sense. By all means, if there's any questions that I'm answering, because I obviously put my accountancy hat on, my financial coach hat on, and my mortgage advisor hat, I kind of tend to talk about a lot of areas rather than what the bog standard mortgage advisor would speak about. If you've got anything really specific that you would like to discuss with me, as I always say, DM me, it's all good. I have gone through a lot of stuff at the beginning of this call, so if you've missed it, by all means go over to my YouTube channel, which is of the same name, and you will have the full live there, rather than obviously TikTok just has the highlights. Okay, great. What is next? Right, yeah, the same person keeps on asking the same question like about 7 times now. Okay, do you offer financial services? I'm looking to buy my first property. Yes, I do. I offer, I'm a mortgage advisor, I'm a financial coach. So yes, I'm more than happy to help you buy your first property. So please DM me and we'll arrange an appointment. My solicitors requested funds from the lender. If we don't complete on time, the solicitor has to send it back. Yes, unfortunately, the solicitor is only allowed to keep it for 24 to 48 hours. So if there is a delay, and sometimes there can be, they do have to send it back. Unfortunately, they're legally not allowed to hold the money. Where are we? I'm assuming the lender won't change interest once they have money back. I'm assuming the lender won't change interest once they have money back. I assume you mean making overpayments. If you're making overpayments on your mortgage, just be careful on that. So I know someone said they had a lot of savings, and they were wondering whether they should, pay some of their mortgage. Now, what I should have said is, it depends on, one, obviously the interest rate is a key factor, but the other thing to be aware of is your early repayment charges. So just look at your mortgage offer or your original illustration, or go back to your mortgage advisor, or I'm more than happy to help, and you should be able to get the information on what's the maximum overpayment you can make, because you can get fined if you make too much of an overpayment. If you're coming up to a remortgage, it's a perfect opportunity if you've got a lump sum that you want to pay. But what I would do is, be careful, because some early repayment charges are quite hefty, because it goes on like 2, 3, maybe 4, sometimes even 5% of the outstanding balance, if you want to pay the whole thing off. The second thing is, when it comes to making overpayments, you could sometimes make 10%, you could sometimes make 20%. Double check with the lender, or, as I said, with your original mortgage offer. Right, can a partner not married living apart gift money towards a deposit? It depends on the lender. So yeah, you really need to find a mortgage advisor that's going to be able to, or myself, or whoever. But yeah, it does, you have to find the right lender that will allow that. I couldn't understand earlier, can you please explain again? Whoever that person is who keeps on sending me the same question, please DM me. I think it will be easier if we have a one-to-one call, because I'm not 100% understanding your question. Right. Yorkshire Building Society 5 deposit for first time buyers. Good. Um, you'll need to just double check the information on that and speak to them. They aren't part of the intermediary panel, so they deal direct. They don't deal with mortgage brokers. So I know about the 5k 1% deposit for lenders that deal with mortgage brokers. So I know the criteria of that deal. I don't know the Yorkshire Building Society deal. So because it's a direct one, you'll need to speak to them direct. I'm afraid I can't help you with that one. Oh, you're welcome. You're welcome. Right. My fixed rate ends March 2026 with a lender, but we want to move house. Um, when would you go to a broker? Right. So I am a mortgage broker, a mortgage advisor, same difference. A mortgage broker just finds you the deal. A mortgage advisor finds you the deal and gives you advice. That's why I call myself a mortgage advisor. So I'm more than happy to help you. Right, with a fixed term, so this person has said their fixed term ends in March 2026. If you want to move before then, check or get a mortgage advisor to check that you can port your mortgage. And what this means is, if you've got a mortgage of say 150k and you want to buy another property that's more than 150k or the same as 150k, you can actually move your mortgage with you as you move the property. So at the moment it's secured against where you're living, but if you find another property that's either the same or more, if you've got the port facility on your mortgage, then you can actually move it with you. So that's something to look into. Or again, I'm more than happy to sort of help you with that. You can just DM me and we can go from there. Right. I am a first time. It's my first time buying the property and selling own for property for less than 6 months. Yeah, again, I really think it's best if we just go on a call, because yeah, yeah, if you can just call me, or DM me and we'll go from there. What website are you able to check and compare rates? If you're talking about mortgages, mortgage rates, then by all means DM me and I source it for you. That's my job. So if you DM me, we'll arrange an appointment and I can go through all your criteria, and then I have my own software. I source the best deal for you. I say best deal because it's not always about interest rates. You could have a low interest rate and high booking fees and vice versa. So you need the best overall deal. What's the biggest factor that contributes to not being accepted for a mortgage? Whoa, okay. The biggest factor, it's a number of factors. So I've once had like a mortgage refused because of gambling on the bank statement. I've had it refused because of the debt to income ratio. So that means that what someone can, the debt that they have outstanding is more than what their income is. I've had it because they didn't declare all their credit commitments. So there are a number of factors, but if you've got a decent deposit and you've got a decent credit profile, you normally are okay, and your bank statements are clean. Those are kind of the three things that you need to be aware of. So what's the big... Okay, asking the same question. Okay, thanks. Well, I've covered all the questions for tonight. That was good. So I'm going to be off now. If I buy with cash, do I need to get a solicitor only? That's correct. Yes, you do need to get a solicitor. Right. So just to recap, what I talked about today was tips when getting a mortgage, a loan. By all means, DM me and we can kind of go through that. you have a quick question, by all means, do you want to drop the question in? I will just recap what I've discussed. So, yes, there are 100% mortgages, there are 99% mortgages, there are joint borrower sole proprietor, which is when someone comes on for affordability, but they're not buying with you. So, there's help if you've got no deposit. There's help if you've got low affordability. There are ways to improve your credit. It can take up to 6 weeks to show a difference, but I'm more than happy to help people with that. So at the end of the day, it really does depend on your circumstances. There are different things and different options. And then again, for all you students out there, the buy for uni is great because you get on the property ladder while you're still a student, which I think is amazing. Um, okay, so I was getting to the end of 5-year fixed, help to buy. Should I pay off the help to buy or buy the interest? Right. With the help to buy, yeah, it's best that you DM me and I know the actual figures and the interest rates and things like that. I'd have to do some calculations in the background to answer that question for you because it depends on which is the most beneficial. With the help to buy, what interest rate is it currently on? What interest rate would it be going forward? Okay, I think people are talking about the right to buy. Tonight, I'm just talking about first time buyers. Um, Last night was help to buy and shared ownership. Tonight, I'm talking about first time buyers, 100% mortgage, 99% mortgage, joint borrower, sole proprietor. Just quickly on the right to buy, this is my standard. You need to go back to the housing association or the council and you need to put in the RTB6 form for any delays. All right, then. Well, thank you, everybody. And as I said, I will be posting some highlights tomorrow. And then if you want to watch the whole thing all over again and what I went through, by all means, go to my YouTube channel of the same name. And basically because it's got the same name, you should be able to find it quite easily, and it will have the whole video, everything that I talked about tonight. So thank you all for joining. I really appreciate you coming on with me, and I'll see you again soon. Take care. Bye bye.